Welcome back to the U.S. housing industry, the real story. This is the Commercial Real Estate Show, and I'm Michael Bull. Please welcome my next guest. It's Mitch Rochelle. Mitch is U.S. practice leader with PwC, and he's joining us on Skype. Mitch, thanks for joining us today.
Thanks for having me, Michael. And I'd like to remind you and your audience that I was, in fact, your first Skype guest.
That's right, the very first one. So, and we'll get you in your fancy studio next time, right?
Yeah, next time. This is my really messy office right now.
That's right. They put you in a nice office there, Mitch. Mitch, we just heard from National Association of Realtors about the numbers in the housing market, but I'd like to talk to you about the perspective, and how that impacts the economy and how it impacts commercial real estate. We all would like to know the forecast, right? We'd like to know the future so we can invest wisely in our businesses and in real estate. But to kind of get us started, how much does housing really impact the U.S. economy?
What's interesting, Michael, about the housing data, and one of the challenges with housing data is how noisy it is, varying. There's weekly data, there's like the NAR is monthly, but there's just a lot of information out there. And what's interesting about it is how focused economists, policymakers, and the like are tied to those economic indicators, housing being a primary economic indicator. But if you cut through sort of the policy aspects of it, the fact of the matter is the American dream of owning a home one day is really sort of vital to the continued sustainability of growth of the U.S. economy. And we'll probably talk more in follow-up questions, but that manifests itself in other aspects of job creation, whether it be construction, the industries tied to that. Then there's the financial side of it, which the job creation in the financial markets and banking and related, the lawyers that close the loans, et cetera. And then we have all of the purchases that go into homes and retail sales. A couple of years ago, when the housing market made its first big surge, no surprise, there was tremendous uptick in retail sales. So there's a knock-on effect of housing, Americans' housing decisions, and how that flows through the U.S. economy.
Yeah, I think that's a good point, Mitch. And I guess we all saw it, right, in the housing downturn that we just went through. You saw retail take a hit. You saw furniture sales take a hit, right? And it's interesting. I used to get gas at this place for my boat, and the guy that owned the station would say, "Are you filling it up?" And I'd say, "Yes, I'm filling it up." And he asked me that every time. So one time I asked him, "So why are you asking me if I'm filling up?" He says, "Michael, you're in real estate. So if you come in here and get $5 worth of gas, I'm selling all my stock." So it can be a real indicator of the economy.
Fill up their boats, it's a leading indicator of something.
That's right. But housing is a real indicator of the economy, isn't it?
Yeah, but what's interesting, and as you heard in the previous segment, what's really interesting is the housing market is largely fully recovered as it relates to existing home sales and existing home activity. Where it's not fully recovered is on the new home side of things. So while Americans are in fact buying houses, and interestingly enough, the rate at which new homes are being bought is exceeding the 25-year, the long-term average, but in new home sales, they're not. So the reason why there's so much focus as it relates to the economy is all of the jobs that we created in the early part of the previous decade around the construction boom really haven't been replaced because we're not building homes at the rate that we used to be. We're building homes at a 200,000 unit a clip annual rate, as opposed to almost 700,000 unit a clip rate in a 25-year long-term average. So that's where the problem lies as it relates to job creation in housing. However, people are in fact buying houses, and they're buying actually more houses today between new and existing than the 25-year average. So we do have the positive uplift on the economy from the retail side of things, from the closing of loans and so forth, We just don't have new home activity anywhere near levels that we saw in the last decade.
Right. And like you said, job growth is crucial to the economy and to commercial real estate. So talk to us about the correlation between jobs and housing that you've seen maybe since the recession.
Yeah, so we took a look at PwC going back to 1965 at the labor workforce participation rate and the home ownership rate. So no surprise, the home ownership rate where it sits today is at a historic low, which does put in question the American dream. And if you look at 4 different periods, there was either positive or negative correlation. But what's most interesting, since the financial crisis, the correlation between the home ownership rate and the labor workforce participation rate has been 90.97, which is about the most positive correlation you can have. Now, maybe because the items driving decision-making and workforce participation are the same, and maybe it's an absolute coincidence, but you can't overlook the fact that the housing market and the economy and jobs are all interrelated.
That's right. Well, stay tuned. We'll have more on the U.S. housing industry. I'm Michael Bull. This is the Commercial Real Estate Show.
The Commercial Real Estate Show is brought to you in part by RealNex, providing a comprehensive suite of powerful commercial real estate tools at an incredibly low cost. Visit realnex.com. That's REALNEX.
Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Our topic today, the U.S. housing industry, the real story. Mitch Rochelle is our guest with PwC. And Mitch, in commercial real estate in particular, and I guess the economy overall, everyone's concerned about rising interest rates. How much does the Fed consider the housing industry and what's happening with home starts and resales in their decision process for rates?
It's obviously just hard to get into the minds of policymakers who guard their decision-making pretty closely. Having said that,
do you want to get in their minds?
I'm not quite sure if I want to get into that head or not. That said, what's an interesting observation for your audience, Michael, is the fact that housing numbers are data points that are, in fact, looked at very closely by policymakers as it relates to interest rate changes. A, as we talked about in the previous segment, because they're an leading economic indicator, and B, realizing how intertied our housing and job and economic growth data points are to one another. If they were to raise rates 100 basis points over time, what impact would have on the housing market and thus have potentially a detrimental impact on job creation in this country. And the thing that everybody ignores is that the jobs aren't just construction jobs. They're every other job that's tied to housing, down to the retail worker in the home improvement store who may lose his or her job if sales volume is down because people aren't buying new homes and furnishing new homes and so forth.
That's right. I might lose my Saturday job at Lowe's, right, if housing takes a hit. What about the media and housing? It seems like the economy and the stock market really reacts to news in the media pretty tightly. What about the housing news? How does the media impact that, and how does that impact our economy?
What's interesting is if I get daily data feeds from a whole bunch of brokerage firms and other data sources, if the housing numbers come out on the 24th of the month of August, and that will be a news story that the markets react to that day, especially in the period that we're in right now. We've got question about what is the Fed going to do in September as it relates to rates. So the markets themselves, when I talk about markets, I mean public equity markets, are going to be looking very, very closely at housing data as some indicator of what that portends for what the Fed may do, and recognizing that job data is coming out a week or so later, and it's all going to be in the calculus of policymakers. So the markets right now, which are quite volatile due to factors outside of the United States, something domestic like housing is going to get a lot of focus because traders are going to try to figure out, is what's going on here somehow tied to what's going on around the world? Is the economy less stable than we thought it's going to be? And how's the Fed going to react to all of that?
Right, good point. And this is the commercial real estate show, so I think a lot of my audience is curious how housing is impacting some of the commercial real estate sectors. And if you will, Mitch, look at multifamily first, because I think some people think that increase in housing sales and new home sales could hurt multifamily as some of these tenants move out. What's the real story?
The interesting thing about multifamily is, so we've created roughly 8 million households, and let me define what that is, because that's sort of economist speak. But a household is when, and Michael, this may be close to home for you, is when children move out of their parents' house. That is a household formation from a Census Bureau perspective. So we've created more than 8 million households over the last several years for which new homes have not been constructed. So that is demand, and when I say new homes, I'm talking single family and multifamily alike. So that is demand for housing that has not been satisfied with new housing supply. So if you just think about this from a supply and demand perspective, we have tremendous demand for housing, whether it be rental or for sale housing, and we haven't meaningfully added to supply. That is why the apartment market is on fire. And that's why rents continue to go up in the apartment market at potentially an unsustainable.
And how might it impact the apartment market moving forward if the housing market heats up?
Look, if you let some of the air out of the demand bubble for multifamily housing at the benefit, not the expense, at the benefit of single family for sale housing, that would serve to lower the trajectory of rent growth for the multifamily market, but not devastate it, because that abundant supply, 8 million households in the rental pool, not in a home ownership pool, that is not a sustainable model from a rent growth perspective. So actually, the apartment market, if you think about it from a perspective, is begging for either less demand or more supply. More likely, we'll see less demand over time as opposed to a crazy amount of new supply.
Okay. And what about rising interest rates? So if rising interest rates could impact housing, maybe less people can afford homes as interest rates rise. For people investing in apartments, quick before the break, is that good news? Does it help the apartment market to have some rate increase?
What's really interesting from the research that we've done at PwC and some of the joint research we've done with the Urban Land Institute, most commercial real estate investors going back the last several years have expected rates to rise. My lights just went off from lack of activity. Not the mental activity, but the lack of activity. But in any event, so if commercial real estate investors expect rates to rise and they're working that into the calculus, I don't think a expected rate increase is going to adversely affect commercial real estate investing activity. It would only be an impact if the degree of rate rise was greater than what is expected, and what they're expecting is about 100 basis points over about a year to an 18-month period.
All right, we'll be right back. This is the Commercial Real Estate Show.
The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL.
Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today we're talking about the U.S. housing economy, and now we're going to talk about how it impacts some of the retail and office sectors around the country. We have Mitch Rochelle with us, U.S. practice leader with PwC. And Mitch, how does housing impact retail real estate today and retailers?
Well, so somebody buys a new or existing home, the first thing they need to do is go to the home improvement store and buy the stuff that they need to fix up the home. So as we have an uptick in new home sales, but more realistically existing home sales, we're going to see demand for retail. The challenge you have with retail as it relates to the path of growth is, and I talked about in the previous segment, since we really don't have activity in the new home sales and new home creation side of things, and all the activity in the existing home space, what we don't have is new rooftops, and new rooftops creating that incremental demand for retail, your typical grocery-anchored, drug-anchored strip and neighborhood centers. So that's part of the challenge we have. These aren't, when we talk about existing home sales, they aren't necessarily vacant homes that are now finding new inhabitants in it. It's just turnover of occupants in homes. So we're not creating incremental demand for retail. So there's still a bit of a headwind as it relates to new home construction and creation for retail. However, subsets of retail are benefiting, like I said earlier, in the home improvement and the furniture spaces and so forth.
Okay. Well, Mitch, I want you to look into your crystal ball that I know you have there for your important clients, the PwC crystal ball. What do you expect for housing moving forward?
If we were to, I should put like a Karnak hat on or something,
Yeah.
but when we look into our crystal ball, we actually see activity staying roughly at the pace that it's staying at. So continued activity in the existing home sales space, continued activity in terms of housing starts at about a 200,000 to 300,000 annual clip, greater housing starts in the multifamily space to satisfy that excess demand you have for multifamily housing, but not anything really aberrational. From month to month, because of weather, because month to month, because of other economic indicators and or consumer confidence, you may see 1 month, but when we look at the data, we try to look at a lot of it versus a 25-year average to smooth out some of the economic cycles. And we see the housing market continuing at the pace that it's continuing at, notwithstanding a 25 basis point uptick in rates or a 25 basis point uptick in rates there.
So I'd like to ask you now about the office market. I think some people may think, well, how does housing impact the office market? Does it?
When you think about housing, you tend to think about suburban markets, office markets, as opposed to CBD office markets. And what I like to remind everybody is, if you looked at a building, 200,000 foot building in Atlanta, somewhere suburban in your market there, Michael, what you probably saw in the rent roll in 2006 was 50+% of the tenants having somehow ties to the housing market. Title companies, brokers, construction companies, engineers, maybe even land planners who were working on tract development. You had a lot of demand for space tied to the biggest driver of our economy at the time, which was the housing market, but the new construction side of the housing market. Now that's gone. And what's interesting is that demand in those office, suburban office segments has largely been replaced with medical uses because of an aging population, and happy to talk about that on another show.
Well, Mitch, it sounds like the office market or suburban market might do well if housing improves. Thanks for joining us, Mitch, and thank you out there for joining us on the 42 radio stations. Be sure and join us next week. We're going to talk the FASB lease accounting changes and how that's going to impact commercial real estate. Until next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show.
The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's RealNex. Xceligent, the resource professionals use for commercial real estate information. Visit xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies or for additional videos, podcasts, or articles, visit CREshow.com.